So the consumer price index for July just came out. I'm going to explain to you everything that you need to know about the CPI. Did it come in hot? Did it come in cold? What does it mean for the market going forward? Are we going to get interest rate cuts? I'm going to show you trades that I make in my account. We're going to break everything down right here. So I posted on my X account a little bit ago. I post on that account in real time, also on my Discord. But right here, US CPI came in at 2.9%. We were expected to get 3%. These are year over year numbers. So we came in a little bit softer than expected, which is good. This is showing that inflation is coming down. This is showing that the Federal Reserve has more leeway to cut rates. Next month, they were saying that the Fed was going to cut by 50 basis points. Because it's only barely better, it's probably going to be a 25 basis point cut. I'm going to go into that chart in a minute, though, to show you the actual percentages. So this is a chart of the 12-month change in CPI since 2004. So this is when we had the big peak before we were at 9.1%. So the last few months, we've kind of been like stuck. Inflation's a little bit sticky around the 3% level. So we did get a decent break below that trend line. We finally broke the 3% level, which is a good sign. So this right here is the CME Fed Watch Tool. If you just go on Google and type in CME Fed Watch Tool interest rates, it'll bring you to this page right here, and then just scroll down. So across the top right here, these are the Fed meetings every time that they make a policy change, like an interest rate cut or whatever. So currently speaking right now, we are at 5.25 to 5.5. So how do you interpret this chart? Well, this is for the September 18th meeting. That's the next meeting that they're going to have. They're saying that there's a 58% chance of doing a 25 basis point cut, because remember right now we're 5.25 to 5.5, and then a 41% chance that it will be a 50 basis point cut, which is a half of 1%, to 4.75 to 5%. So it's kind of split down the middle, but it's favoring that 25 basis point cut versus the 50 basis point cut. I'm going to hop over to CNBC and show you their analysis, and then I'm going to hop into my trading account to show you guys what I'm doing for today.
It's a biggie whether they ease, and the numbers are hitting the wires right now for the July Consumer Price Index. Headline number coming in as expected, up 0.2%, up 0.2% on headline number. If you look at ex-food and energy, exactly as expected as well, up 0.2. The issue is, of course, it's following 0.1, which, just like the last number, was comping towards the first several months of COVID. Now, if we look at the year-over-year numbers, and I think these are always important, we're making some progress. 2.9% on year-over-year CPI. We're expecting 3%. In the rearview mirror was 3%. 3% was the best, the lowest CPI year-over-year rate going back to March of 2021. So this is indeed good progress, and that number in 21 was 2.6, so we stay comped to the same time period. And finally, if you look at the year-over-year core ex-food and energy, we made progress, but it's as expected. 3.2% in the rearview mirror was 3.3. 3.3 was the lowest year-over-year rate on the core since April of 21 when it was 3%. Now, many don't look at the following, but I always look at the following, the indices. If you look at the CPI actual index, it was at an all-time high last time at 314.175, a new all-time high, 314.54. And if you look at core, same scenario. If you look at the all-time high, 318.346, came out at 318.872. Now, those numbers might not mean a lot to people. That was core index. But those indices have never been higher. Never been higher. So that really represents the definition of disinflation versus deflation. We have less inflation, but the indexes keep climbing higher pretty much every month. How did the market synthesize all this data? Well, prior, the 10-year was at 382. Now it's at 386. So we've gone from down 2 to basically up a couple. And if we look at the 2-year, it went from 392 up to 398. Now, just to be fair, we were very close to 15.5-month low close on the 2-year prior to the number and a 13-month low close on the 10s. Kind of close. About a week ago, we made those levels. And that's what I want to point out. And that has pushed the dollar index, if it closed where it is now, to a 7-month low. Let's throw it to the panel to debate. But once again, I wanted to bring up, it's about timing. If the Fed eases 50 basis points in September and inflation is a big election plank, How does that look to the general public?
So that was a little CNBC breakdown. He kind of rambles a little bit, but to be honest with you, usually he has good reports. But heading over to my Schwab account, so we're gonna go to the 3-month chart right here. So my peak at my account was July 31st at $803,000. Right now it's at $744 and we're down about $10,000 today. So the market's a little bit nervous about this CPI report because pretty much what's happening right now is it's the unpricing of the 50 basis point cut. Because remember I said the CPI came in at 2.9%, we were expected 3. So maybe if this came in at like 2.5%, we would get the 50 basis point cut. But right now it's not really justified to do the 50 basis point cut. So that is being unpriced from the market. QQQ right now is down about 0.6%. And the S&P 500 is down just a little bit. So it's just a lot of digestion right now, and it's just a lot of repricing of the market. So this is the full shebang of everything that I have open right now. I'm actually gonna go through a couple of things on this too for you guys. These are the biggest gains on the top, biggest losses on the bottom. So this one right here, this is the SQQQ. This is my hedge that I put out there. This one I'm okay to be down on because when the market goes down, this will go up. So this is just a hedge, but it's only 1% of my portfolio, so I'm not really worried about it. The ones that I am down on, like you guys know, is the IWM. I have the 220 calls. I still have those open, and then the 215 puts. The thing about those trades is they're for 6/20 of 2025. I think that for now, going towards the election, IWM is kind of going to bounce all over the place. I'm not a real big technical indicator guy, but there's so much support around the 200 level and it's just a big psychological even number. I would feel kind of stupid if I would close out of that position and realize the loss. Now I'm okay to realize the loss because that'll help on my taxes because I have so much realized for this year, but I think that IWM is going to be higher than it is right now next summer when these expire in June. So that's the bet that I'm willing to make. Now you guys are all going to say, oh, you're down 10,000 on IWM, 10,000 on SQQQ, 6,000, 2,000. What the heck? But look at the main bulk of the portfolio. Overall, I'm up $194,000 right now of unrealized gains. We have 107,000 in the Qs, 50,000 VOO, 25,000 Tesla, and then these are the options that I have open that are the most profitable. 11, 8, 6, 6, 5. So we're looking okay. So then on the right hand side, a lot of you guys ask me about how much buying power I have to have in the account to do these trades. This is what it is right here. So for example, this one for Triple Q right here, it's a $400 strike. I'm short 10 contracts. So technically I'm on the hook for $400,000. So $400,000, but Schwab is only requiring me to have a margin equity of $46,000. So it's pretty much 10%. Now I call Schwab all the time and I ask them about this, like how do you calculate how much margin requirement I need? And it's this complicated formula and it's based on a lot of things. It's based on number one, how many contracts, the duration of the contract, the security that you're selling the puts on, and then the current price of the security that you're selling puts on. So as Triple Q, if it trends up in price, this margin requirement is going to go down because the trade is most likely going to expire worthless, and then I'll just collect that premium. But if the price of Triple Q goes down, this margin requirement will go up because it's starting to get more risky, and there's a chance that I will be assigned those shares. So that's how that works. But at the end of the day, CPI came in good. We could have had a crazy high reading today, but we didn't get it. So the market's taking a little breather right now. There's more data that's going to come out tomorrow. So heading over to my Discord, I post everything in real time, but some of the stuff coming out tomorrow, we have retail sales, unemployment claims, we have Walmart earnings, Alibaba earnings, and then we're going to see if Gaza could get the ceasefire so that that war in the Middle East does not escalate. I have the premium sections where I do my 10K account live trades. I show the values of that account every single day. I have the 700K account live trades, and then I have my bull bear scale that I do every single day for different time frames, just to show you guys how I'm oriented in the market right now and if I'm willing to make big trades or not. And then I'll analyze your real estate deal, and then I'll analyze your stock deal. So any questions that you guys have with stocks, real estate, shoot them over. I have like 5 rental properties, so I feel pretty good about analyzing those deals. And then we have just the general sections right here where people talk about whatever's going on, stock trade ideas, earnings reports, taxes, real estate, and then we have where I post my YouTube videos. And a lot of people have like option setup questions here. So this is where I walk you guys through your trades just to make sure you understand everything that you're doing. Because we know it's easy to flip things and sell a call instead of selling a put or whatever that may be. So I'm here to help you guys out with that. So I make videos like every other day. So if you guys like what I'm producing here, make sure you like and follow. I like to follow the markets. We're going to follow the progression of my $700,000 account and also how the $10,000 account does. So I'll see you guys later.